Our first subtopic will be number 1, taxation. That is tax planning. Tax planning for individuals. Tax planning for individuals. And in this particular case, we need to understand how an individual can reduce his tax burden. An individual is like me or you. So how can we minimize our tax burden without violating tax rules and regulations? That is what we'll discuss under these particular taxes, under this particular topic. Number 2, we are going to look at how to mitigation of direct and indirect taxes. So how can we minimize the effect of both direct and indirect taxes? Direct taxes are simply those taxes whereby the impact and the incidence are on one person. A good example is like pay as you earn. Pay as you earn is a good example of direct tax. Indirect tax taxes are like VAT, and these are those taxes whereby the tax impact and the tax incidence are on different persons, meaning they are imposed on one person and the final resting place is another person. That is a good example. So VAT is a good example of indirect taxes. So because we are covering tax planning, we need to see how we can reduce the effect of these particular taxes and how we can do it in a way that we are not engaging ourselves in tax evasion. The other subtopic will be evaluation of remuneration package. Evaluation of remuneration package. In other words, how can we evaluate a job? Like for instance, you can get a job or 2 job offers at the same time. So how can you evaluate the 2 and you select the best? So that is what we'll discuss in this particular topic. The other subtopic that we are going to cover is tax avoidance and avoidance measures and avoidance measures. So we will get to understand what is tax avoidance and which are those cases whereby you can engage in tax avoidance and KRI say no to such particular practices, because tax avoidance is also a professional way of reducing the tax burden. But the taxpayer does not have a final say. There are those tax avoidance practices whereby KRI can say no to some of those particular practices. So that is what again we are going to discuss on this. The other area that we are going to check, number 5, is about tax incentives. Tax incentives. And like now, in different revenue authorities, we have taxpayers who are existing, and we may also want to get new taxpayers. The government may want also to have new taxpayers in the system. But how can we attract these new taxpayers? We can manage to attract them through tax incentives. So we give them tax incentives as we are going to see later, the types of the incentives which are meant to attract them so that they can join the tax system. We'll also discuss disposal, number 6, disposal of business operations. Disposal of business operations. So sometimes we can be having a business that is which is operating, and we may want to dispose that particular business as a going concern. So how can we handle tax matters in that particular case? We will see in this particular subtopic the responsibilities of the seller and the buyer regarding the tax matters. What are you supposed to do regarding the same? The other one, number 7, we also have Assessor. Assessor means Special Economic Zones Act. Special Economic Zones Act. Special Economic Zones Act. In the special economic zones, we have those zones whereby the government has offered some tax incentives, such that if an investor invests in such areas, you will find that maybe your tax burden tend to be a bit lower. So you will understand again in this area what Assessor means and some of the benefits or value it has added to our economy. And the last one, we'll look at number 8, tax risks. Tax risks. We need also to know what do we mean by tax risk. What are tax risks? So, and you'll see that a tax risk is a situation whereby or is a chance that a tax that is supposed to be paid may not be paid, or the persons may not comply with the tax system, and these persons may comply through paying tax. They also comply through maybe like filing of tax returns and such, and therefore through tax risks you will see now what are these risks, what can arise in the process of dealing with the tax matters. So learners, I would like us now, having completed the areas that we are going to cover, let's see the first topic, which is tax planning for individuals. Tax planning, planning for individuals. Tax planning for individuals. This is our first subtopic, tax planning for individuals. In other words, we are asking ourselves, as individuals, how can we reduce our tax burden? You as an individual taxpayer, how can you minimize your tax burden without violating tax laws? Because if you violate tax laws, you will be subjected to penalties and fines by the government. And therefore, in this particular subtopic, we need to see now some of those techniques. We need to know those particular techniques that we can engage in so that we can minimize our tax burden professionally. So, tax planning for individual, we are saying it simply means minimizing tax burden for individuals professionally. As an individual, don't pay tax blindly. There are those techniques, there are those advantages that are in the tax system. You can take advantage on the same and you reduce your tax burden. And these techniques, we can see them, they include that is tax planning techniques. Tax planning techniques. They are like what? Number one, I can start with one simple thing that we normally come across, known as personal relief. There is something known as personal relief, which is normally given by the government. And we know very well, personal relief reduces the gross tax liability. That is, after you calculate the gross tax, you subtract personal relief. And this is a tax planning technique. If the taxpayer is not willing to have personal relief, well and good, go ahead and pay more tax. But if the taxpayer suggests that when he calculates the gross tax, then he suggests that there is something else that the government gives its people, known as personal relief. And when I subtract it, I'll reduce my tax burden. He goes ahead to subtract that particular relief. He cannot be penalized. So personal relief is given by different countries, and it also keeps on changing depending on the requirements of KRI or the government. So it is normally standard to all individuals. And the other important thing to note, we only give to resident individual persons. We don't give to non-resident people, but we give only to resident persons. Those people who are having permanent home and they were in Kenya maybe for any period, or those people who come from outside Kenya and they happen to stay here in Kenya for more than 183 days in the year of income under consideration. Another technique, number 2, is insurance relief. Insurance relief. Again, somebody can take advantage of insurance relief. For instance, if somebody has taken a life insurance cover, or he is contributing towards education policy, then that person is entitled to insurance relief. And this again reduces the gross tax liability. The other relief technique, number 3, I can also talk of double taxation relief. Double taxation relief, DTR. This is also a relief which reduces the gross tax liability. But this one is only exercised by those people who are getting incomes from abroad. So they get those incomes from abroad. These incomes are subjected to tax here in Kenya, but we give them a relief known as DTR for the tax for the incomes that they have disclosed from abroad. We also have another technique of reducing the tax burden, that is number 4. We can have also school fees benefit. School fees benefits. In the other level, we discussed how to tax school fees benefit. And school fees benefit arises where the employee is provided with the employer caters for the school fees on behalf of the employee. And therefore, if somebody is provided with school fees benefit, according to the Income Tax Act, it is either taxed on the employer or on the employee. So if it is taxed on if somebody now want to do tax planning now as an individual or as an employee, he can convince the employer to provide the school fees but be taxed now on the employer, so that he can reduce his tax burden, so that this employer can minimize his tax burden. And therefore we are saying, because it can be taxed either on him or on the employer, he can convince the employer also to take the burden of tax, so that the tax burden for the individual or that particular employee again can reduce. Another technique